Welcome to the Crypto Layer HQ. In the previous video, we went over where we were most likely to bottom based on prior cycles. Now I will be going over where we are most likely to top in the coming bull market that we are expected to have in 2027, 2028, and potentially 2029 as well. So we can see in prior bull markets, they lasted around 152 weeks, 152 weeks, and 150 weeks. So bull markets usually last anywhere between 150 weeks to 152 weeks. So assuming that we bottom around this zone, and if we go the earliest we could potentially bottom, which would be early October, and we take the minimum amount of time a bull market has lasted, historically speaking, that would be 150 weeks, which would take us to August of 2029. If we take the latest, we could potentially bottom, which would be November 2026, and go out 152 weeks. That would take us to October 2029. So this would mean we are likely to top between August 2029 and October 2029. I will say though, we usually top in Q4. So I dragged this target out to the end of 2029, which would mean the most likely we are to top would be between August of 2029 and end of 2029, which gives us a slightly larger range. Now, in terms of returns and price points, we could potentially top out. So if we see previous bull markets, we can see that returns have significantly diminished, going from 11,000% to 2,000% to, in the recent bull market, 700%. We can assume that this bull market will also be diminished. And if we want to be conservative and say 700% will go down to 350%, for example, so the return's half, and we take it from the bottom where we could potentially end up bottoming this bear market and go up 350%, that would take us to as low as 142k. If we are a bit more optimistic and go with a return of 700%, which is the same return we had last bull market, so that would mean we don't have any diminishing returns, and we go from the bottom, 700% would take us to 250k. The reason I'm not doing 700% from, the reason I'm not going 700% from the higher zone we might end up bottoming, which is 44k, and going up 700%, is I think this is quite unrealistic, since for one, having no diminishing returns in the bull market is very unlikely, as well as the lower we go, the more likely we are to have higher returns. So to get equal returns of 700%, we would need to go lower, so potentially closer to the 30k region. It's unlikely that we would only go down to 44k and then have no diminishing returns on the upside. So to get the most likely scenario of having the highest returns, we would need to go as low as possible. So that gives us a region of 144k to about 250k between August of 2029 and end of 2029, which means we would potentially top around this zone. Of course, this is harder to predict since we still haven't put in a bottom. Once we have a clear bottom in, it will be easier to potentially see where we could end up topping in the coming years based on prior cycles. But until we have that bottom, it's a much harder calculation to do, since we don't know exactly where we bottom, since it'll make a big difference if we bottom at 30k or 44k, and of course we could end up bottoming even lower or higher. So once we have that data point, we'll definitely analyze this again and see where we are likely to top. So big picture wise, what we can expect to see is something like this, and then something like this in the bull market. So this is what I'm expecting based on prior cycles, the continuation of the bear market into end of 2026, and then a bull market in 2027, 2028, and 2029 that will hopefully take us into this region and hopefully the higher end of it.